Now, last week there was a rural investment seminar in the Barfoot and Thompson CBD offices in Auckland, where our next guest and his guests were on their soapbox to Queen Street investors, painting the natural competitive advantage we have on the rest of the world when it comes to the New Zealand primary sector, even with all the immediate challenges in front of us. Macfarlane Rural Business in Mid-Canterbury's solid dairy benchmark returns on their dairy clients reflects that shift in farming focus to sustainable returns, not production and underlying yield, and not simply price per hectare. Bottom line, many dairy farm businesses these days are cash flowing brilliantly across the country, and no less than my backyard here in Canterbury. We're joined now by Conrad Wilkshire, General Manager for Property Brokers. Hey Conrad, a really good presentation I had a flick through just before the show. But what was that key message you really wanted those Auckland investors to take away, that the market is in good stead?
Yeah, look, absolutely. Thanks, Sarah. Good to be on the show again. And it was a good turnout. And I think investors, and Auckland investors no less so, are looking for options. And our dairy sector, particularly, we felt has been overlooked. And I suppose the reasons for that, if you take Canterbury, there were only three commercial on the open market, three commercial sales last year. When in time's gone by for about 21 million compared to say maybe 5 years ago, where it would have been closer to $500 million worth of sales. And so our view is that the hedge funds that were very active in the market, say 5 years ago, saw the long-term future in our dairy industry and could probably see the impact of global warming and a few other things in our natural, healthy food, sustainable food production. You take Canterbury as an example, we're actually using half the amount of water in our dairy systems than we would have, say, back in 2000. And it has a lot of natural advantages. Yet, we felt that actually there's not only New Zealand dairy farmers investing in that sector, but actually they're very well run. And Macfarlane Rural Business did a very good presentation, both Andy Macfarlane on the big picture and Jeremy on his Mid-Canterbury benchmark. And it busted a few myths, actually. The great majority on that benchmark of 34 farms are absentee owned. And the great majority of them have really stable staff. The staff complement has often been there for a long time. It's not funny thing about Canterbury. Once you sort of put a stake in the ground there, they don't seem to leave in a hurry. And they've got really good cash flows. And so, on a $6.50 sort of return payout, these farm systems are dropping 7.5% cash yields. And as Con Williams, who's speaking on behalf of Farm Investments, the general manager there, he was just speaking to the fact that for the first time in farming, you can generate leverage returns based on cash flow. So there's no need to be, obviously capital growth over the long term in farming, I think, is still present. Our finishing farms would demonstrate that right now, if you look at the latest Ryan's returns. But even if you put all that aside, those returns in dairy are very good. And equally, even if you factor in, as Andy would say, some of the headwinds we've got with environmental planning, water use, there's a lot of science and there's a lot of action under the way to say, yes, they are risks that are present in the market, but there probably have been, it doesn't take anything away from that. These are good businesses. And actually, our food it holds a premium across all the categories, whether it be ingredients right through to some of those premium cream and cheese categories, all the rest of it. So a good catch-up, both hort and pastoral.
Yeah, absolutely. Now, I do have the EBIT data breakdown there, and it's very good in terms of, even when you're climbing into the 55,000 a hectare, those returns stack up. That's when you're looking at a payout sort of 650 plus. But do you think there has been a few burnt toes and fingers from that sort of 2013, 14, correct me if I'm wrong, when we saw that significant milk payout drop under sub $4, and there's long memories in that.
Yeah, there is. And look, there's no question our dairy sector, the returns are cyclical. But if you look back at that time, it was a kind of a perfect storm. You had 2 years on the trot of low returns, but that was very much a fact of the quota coming off European supply. And those Irish farmers, for one example only, but it mirrors a lot, hadn't had they've under-leveraged businesses. They've been working under production constraints. And farmers the world over are the same. You take the constraints off and the production will rise. But that supply-demand imbalance, I think, has corrected significantly. And so you look at that, and then you look at, in the New Zealand context, you had the change on foreign policy, so the hedge funds weren't able to operate at the same level. And then the Fonterra went through a pretty tough time. That really knocked confidence in the market. And you look at the Fonterra turnaround, and Andy McFarlane spoke very well to that. And its focus on margin, not just volume, and the ability to manage costs. And you look at the turnaround in Fonterra's performance and its share price, none of those things were present a couple of years back. So I think if you have, and then, not to mention the regulatory changes, Reserve Bank changes on bank policy, environmental planning, it's a long list. And through all of that, these farmers have doubled down and come out the other side. So these dairy systems are compliant. They're working to very good industry standards. And so to our view, the pendulum's just sort of, the confidence pendulum swung far too far over to one side, and it probably just needs to come back to a bit of reality as to what these businesses really are.
Okay, I'm looking here at a Farmers Weekly article by Colin Willis-Croft about the 3 South Waikato dairy farms sold recently for more than $35 million. But as I'm sort of scrolling, correct me again if I'm wrong, it was still only around $27,500 per hectare though. I mean, are you saying that if you're a New Zealand investor right now, you can actually pick up quite a bargain?
Yeah, I think word would be value. If you compare the South Waikato dairy market to the Mid-Canterbury market, they're different soil types, different production systems. One's irrigated, one's non-irrigated. But there's no question there is value in that south. And we've seen more sales activity in the last couple of months than we have in the last couple of years in South Waikato. And we've successfully continued since the Atarangi sales, which you refer. We've successfully concluded further sales in that market because, and the people buying those assets are long-term operators in that area, obviously operating at scale, but they really understand that market, and they really understand production systems in that location. And they're seeing value in terms of the underlying cash flow, and they're obviously getting the funding support to make that happen. And they're all NZ, either family-owned or large-scale farming NZ businesses that have been operating for a long time.
With as you said, the majority of absentee owners, my brother-in-law works in horticulture in the Bay of Plenty, and we were having a discussion on the weekend about the rise in directorship responsibility now to a lot of these key things, environmental regulations, health and safety, etc. Do you believe that is putting a lot of investors off as well in terms of where those corporate buying will have to have a lot more risk management around?
I think if I think back on the seminar we held last Wednesday in Auckland, we had both McFarlane Rural Business and Parent Ag, both with very big New Zealand footprints in terms of providing specialist advice. There is, I think, the human capital we have in our ag sector to be able to manage those risks and support either owner-operators, existing owner-operators, or particularly new investors. There's a lot of work that those businesses like Parent Ag and McFarlane Rural Business are doing that can help manage those risks and assess them. So and can help with the due diligence. So I don't see that as the barrier. I think it's been the perception of dairy as a sector and its responsibility to its environmental code and sustainable food production. And I think those questions are being addressed hard and fast. So I don't see those. There's definitely risks to be managed, nitrogen leaching, how we look at our carbon footprint overall. But I do believe there's any amount of advice for people to make a good arm's length decision around that. And when you compare our business model to how the international dairy business models operate and the kind of big, large-scale monocultures that we're competing with, particularly in the States, you then look at our integrated farm systems and the way we manage our farms. A lot of these farms are operating under System 2, System 3, and at large-scale operations. So I think we're well placed.
ironies of what I'm hearing, where you have the banks trying to pull back their risk in terms of agricultural loan book, yet you have Prime Minister Jacinda Ardern this morning saying we just want to fund the productive sectors of New Zealand and get that money out there as fast as possible. What are you hearing from bank lending into the primary sector?
Well, I think to rule a line under the obvious, obviously COVID-19 has changed the landscape. So you look at the reliance on a productive sector today, New Zealand primary sector, is massive when you think about the education sector. I attended the Massey graduation last Friday, and that in international education was a big earner. You look for New Zealand, and then you look at our the exports of tourism, and again, it's been set aside for the time being. So when you look at our primary sector, that's where do you put the capital? Where does the banks lend the capital? Then you also have our farming sector retiring $1.5 billion worth of debt. So for the first time in a long time, its net borrowing went down. And so I think if you have a look at the farming businesses, take the dairy, which has come under the real spotlight with its debt. It's had the third consistent payout in a row. It's retiring principal in line with and ahead of expectations. And it's a sector that continues to cash flow, so it's been re-rated. So I'm not saying there's not more to be done, but it's certainly, the average debt out there, if you take the dairy sector, about $20 a kilo, which actually can be managed quite comfortably, certainly cash flow wise on current returns. So, I would say that it's like all things. Often these things can be situational, not to mention the Reserve Bank has pushed out another further 12 months to July 22 before these regulatory changes around the capital people have to hold, banks have to hold against the sector has been pushed out. So I think it's quite a change. It's quite a change on 12 months ago.
Well, if you're looking at investing in the New Zealand dairy industry, now is the perfect time. Conrad Wilkshire, their GM for Property Brokers. Get in touch with the team at Property Brokers. I mean, golly gosh, yeah, there's a lot more going on behind the scenes and really start to stack up the returns that I've seen on the slides in that presentation to the Auckland investors in conjunction with Barefoot and Thompson. You really actually start to see a different picture. And as Conrad said there, we know in the industry that the dairy industry certainly stacks up in terms of the direction it's going environmentally as well.
This is Sarah's Country.